And there you have it. The markets are officially closed on this Wednesday, July 24th. Welcome, investors and traders. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As you can see here, we closed with a red candle on much higher volume. In fact, the volume today was more than twice what we saw yesterday. And if you look down below, you could see that the CCI is now crossed over the zero line or the momentum line. So if you're following along with my teachings for the CCI especially, you'll know that once that line crosses, we generally see 2 to 4 more days of movement in the direction of the cross. So I do believe we're going to continue lower, and that's why I have my downside target there at 395.69. That has not moved. I think we could hit that very soon, and so that is DIA. If you look at IWM, you're going to see that we have this red candle, longer shadow on top, although that's not a shooting star like what we saw back here, but it is very close. I would say it's akin to a shooting star. The fact that that's a long red candle with the oscillators hinging lower, that tells me that the sellers are starting to move in on IWM. And my downside target is still in place on that one as well. Let me get that data box to come up. That is 208.58. Keep in mind, we still have an open gap here, and we have another open gap down here. So it could be a wild ride for those who just recently moved into IWM in more or less a sector rotation. If you take a look what's happening on the weekly chart for IWM, well, guess what? There it is. We got a shooting star followed by a doji that also resembles a shooting star. Dojis are small body candles where the opening and the close are equal. We are so close to a doji here. And remember, we're recording this on Wednesday, so there's still 2 more days left in this candle. So if we close on the low, let me just do a little color drawing in here. If we close on the low for IWM for this week, it's going to look like a red candle there, and then we will have another shooting star. I've been pointing out the shooting stars week by week in these lessons for especially the new followers who are learning about technical analysis. A shooting star is a very bearish candle. You can see we saw one here. Here is a doji right here. Here's a bearish engulfing right here, and another bearish engulfing right there. So we follow those candles. Those are my favorite candles to give us that indication as to whether or not we're going up or down. This is a bullish harami right there. As I magnify that, that's when you have a small body candle that falls within the previous red body. So get your lessons right here on the weekly reports and the midweek reports, and I'll do my very best to continue to add value. That reminds me, make sure you follow and hit that notification bell so when I put out the videos for these lessons, you'll get that lesson. I keep these videos very short. It's kind of like a weekly vitamin, if you will, right? It's a weekly financial vitamin for technical analysis. And so looking at that weekly, down below, the CCI is pivoting. A hinge is when it changes direction. A pivot when it reverses its direction. So that is a pivot lower. And I think that we're going to go right back down. So my downside target is not so far-fetched down here on IWM right there at 208.58. Moving on to the Qs. This was an upside target that I had from last week. This is pretty incredible because look at that. This was my upside target for the Qs, 483.65. What happened yesterday? The high was 484.43. So we hit that like a champ and then gap down today. This is the power of technical analysis, folks. When you learn how to forecast and you could put the odds in your favor, keeping in mind that my percentage of accuracy is over 80% on my target hits, right? That's the best in the world. And I want to teach you how to do exactly what I'm doing. There's no need for you to have to rely on me. I'll teach you, sure, I'll coach you, absolutely. But you could do this on your own. This is not rocket science or any kind of quantum physics. This is technical analysis. It's pretty basic. Once you learn the signals, then you could do it and then teach it to your friends and family members if they want to learn it. So that is a big volume bar on a big red candle. So my downside target is still in place here for QQQ at 455.89. That is within striking distance. Taking a look at the monthly chart, you'll see here that is a shooting star. So I'll magnify that for you. That's a shooting star that doubles as a bearish harami. The bearish harami, remember what that is. It's a small body red candle that falls within the previous green candle. And look at the monthly CCI down there. It is hinging lower with a negative divergence. Remember, I repeat, because I teach you repetition. When you have higher price highs followed by lower highs on the CCI, that is a negative divergence, and that is extremely bearish right there. And so keep your eye on the downside. You option traders must be celebrating. I should say the option traders that have negative delta are celebrating. And you're going to have a great time. I think in the coming weeks, you're going to be very, very happy for those who are playing the bearish side of this market. Looking at SPY, I have a downside target that was hit. But guess what? We did this one in reverse. The upside target hit before the downside target, but we ultimately hit the downside here. And I still have an open target on SPY at 527.07. That becomes the new go-to target. I'm going to keep an eye on that with you week after week. I don't think we're going to hit that soon, but I think we will hit that eventually. Now, let's talk a little bit about volatility. VIX, I had my downside target. That hit on Monday, believe it or not. Remember, this crazy looking candle was from the CrowdStrike debacle. And so the very next Monday closed with a bearish engulfing. And in the same day, my downside target on the VIX was hit at 1522. Today, very, very interesting. I've had that upside target on the VIX for a very long time. That is finally hit to the penny, $18.38. You could see that green dotted line is labeled right there with my target of $18.38. Now, some of you have been with me long enough to remember where my other high side target is. There it is, a little hidden out of range. My high side target for the VIX, and I do believe we will hit this one day, is 41.88. That has not moved in months. If you take a look at the monthly candles on here, you could see that that 41.88 level crosses through a lot of these highs. And I think that we are on our way for that to happen. Not anytime soon, but for those who are short the market, you have to understand that for the most part, the VIX is inversely related to the S&P. So if the VIX is expected to go up in a big way, guess what that will do to the S&P? It will most likely result in lower prices in a big way. So that is the VIX. Let me just do a quick analysis for those of you who are trading SLV. I haven't reported on that one in a while, but look what happened today. We closed with a bearish engulfing candle right there. Remember the bearish engulfing candle, big red candle engulfing the previous green candles. However, that red candle is engulfing the three previous green bodies right there. So this one could go lower. I'm laying in wait with cash ready to go. I'm not ready to buy SLV, at least not yet, but I will be. I have a downside buy area right around $23, $22.98 to be exact. That is where I will most likely start to buy back some of my silver. I have cash ready because I've sold out of 25% of my silver position. and I'm waiting to buy it back and parlay that position into a much bigger one down the road. So long term, I like to stay long SLV. If you take a look at the monthly chart on this, this looks like one big elongated cup and handle right here. Again, this is my buy area down here. If we come down and I get to buy, we most likely will see a bounce off of that roll reversal support level. And who knows, we could wind up with silver a lot higher. Just throwing that out there as more or less a freebie analysis tonight. From 6 to 7, I go through my rapid fire stock analysis session. If you're interested in becoming a member for free for 15 days, go to StickyTrades.com. It does not cost you a single penny. I've mentioned this before. I'll mention it again. We do not take credit cards. We don't play that game where we take your credit card and then put the responsibility of you having to cancel if you don't like it on your shoulders. No, we don't do that. If you like it or you love it, you just let us know, and then we could get you in to one of our memberships. And there's something for everyone. We really enjoy delivering this content to you. I hope you enjoyed it as well. Please like, share. You know what to do there. It helps the algorithm. Hit the notification bell, and I will talk to you on the next video. So long.